But before I begin the speech, I would like also to say that I'm going to personally mention you are one of the top speakers that I've seen, and one of the top in this club for sure. And I learned a great deal from you. So, I'll mention you. So, yeah, I know. I don't want to cry, but on to the speech. So why the heck are the markets tanking, right? That is the question. Two things. One of them is oil. Probably heard that a lot. Second one is China. Those are the two biggest things. There are a couple of smaller things that I'll get into that a little bit later, but it's mainly oil and China. So oil, let's take a look at oil, right? What's going on with oil? It's basically supply and demand. Everybody knows. As a matter of fact, today on TV, there was a report about that right before I came to Toastmasters. Supply and demand, right? So what happens? Back in the days when oil was at a lower price, started getting up in price, of course, right? So the demand for oil started increasing. United States, to try to level things out, they started drilling like crazy. And the United States, at that point, became one of the top, as a matter of fact, the top producer of oil in the world. Surpassed Saudi Arabia and Russia, which were the top producers. Things then all started coming down, as we all know. And the United States has decreased the production, not to the level that they want to be at, but somewhat. Now we also have OPEC. What is OPEC? OPEC is composed of a number of countries, the top producers of oil in the world. And they produce, I don't know what percentage, but it's a huge percentage. So they have come, countries have come and talked to OPEC. Can you please stop producing oil? This is killing us, right? And they said, no, forget it. We're going to continue doing what we're doing. And they continue producing oil. Now we have Iran. We had sanctions with Iran. Sanctions were lifted. Iran is going to start selling oil even more now to the rest of the world and to the United States. So that's also going to bring the price of oil down. So that's the supply side. The demand side is basically that oil, there isn't the demand as it used to be, basically. That's what it is. China is the second largest economy in the world. And China was, for 30 years, they were averaging growth of 10%. 30 years, that's incredible. This last year, their growth dropped to 6.5%, 7%, something like that. I can't remember the number exactly, but it dropped. So they don't have that appetite of oil anymore. Now China also, the thing with China is that China has they are a communist country, but they're also practice capitalistic economics behavior. So they have the yuan, which is the currency, and they control the yuan. They're not really floating it like everybody else and let the world markets adjust it. They just try to manage it themselves. The same thing with the stock market, their stock market. Their stock market at the beginning of the year, because the economy is not doing as well as it used to be, started declining. And they closed it before the end of the day so that it doesn't go through the roof. As a matter of fact, I think they did that a couple of times. So that manipulation of their market and also the currency has kind of sent a wrong vibe throughout the world, and there's hesitation from many countries, and that's why the economy, that's one of the reasons the economy in the world has kind of stabilized and oil is not being consumed as it used to be. So what is the relationship exactly between the markets and oil? They are positively correlated. So what does that mean? You guys remember back in the days, a few years ago, when oil was at a low price, $30 a barrel, something like that. The market was also somewhat at the same level, relatively speaking. Oil went up to 145, I think it peaked at $145 a barrel. The market, at least the Dow, was up to 18,000. Oil started coming down, market started coming down. So there is a direct relationship with that. So what's happening now, investors are looking for other ways to make money. They're getting away from oil, they're getting away from energy, that kind of business, and they're looking at something else. Those are the main two things. What else do we have? We have the dollar, our currency. It is a strong dollar. So what's happening now? 30% of the S&P 500 companies' revenues, the revenue that they get, 30% of that comes from stuff that they sell overseas. This is a strong dollar, so the other countries are not buying our products like they used to years ago because of that. And the last thing that is also hurting our economy to some extent is the Fed. They started raising interest rates, right? They used to be very low many years ago. They kept it for a long time, I think ever since Obama took office. And then I think just in December, they raised it. And I think that they're planning to continue raising it a little bit at a time, or gradually. So those things are affecting the stock market. Now, if I haven't depressed you enough, hopefully you're not gonna go back and on your phone check your 401k plan or your investment plan or your IRA plan. But one good thing about this whole thing is that this is an election year. And on 8 of the last 10 election years, the market has gone up. Toastmasters.